Welcome to another episode with Closed and Covered with David Redmond, Wadih El Khoury, and today our guest is Stephen Moorhead. Again, we always try to bring a lot of community leaders, try to discuss some updates, dive in a little bit about some specific subjects that they are experts in. And today we're going to be talking about title and a little bit of law. And we're going to basically pass it off through me, David, and then Stephen, and see what we're going to discuss.
Oh, no, I think it's great. I mean, I've known Steve for 20 plus years, and I can't think of a better person to have, on the show or podcast that is so diverse within our community. Number one, the attorney side of it, the title side of it, basically a community, advocate for so many different associations and the events that you put on and your company puts on as sponsors. I mean, I can't think of many people that is going to touch all the different aspects of our community than Steve. So, Steve, thank you for taking the time to come in here. And we're looking forward to some of the expertise I know we're going to get.
I'm excited about it. Yeah, this is great.
Yeah,
Two guys I've known for 20-something years.
Yes, sir. Yeah, I do remember actually you were next door to us, and we used to come in and do a lot of closings with you guys, a lot of corporate doc reviews.
Yeah.
I remember James, my partner, bless his heart, he was the one who introduced me to you, and we've done a lot of work together for 20 plus years.
It's crazy.
Time flies for sure.
Time does fly, and to kind of piggyback off that, I mean, since I've been here, we've used you and your company in the various forms for mortgages and high velocity at times and not so much in others, which I wish was high velocity all the time. And I know that you and your team have always been the front runner in the title side of it. And I can say from a customer perspective that you guys have always been nothing less than amazing. And our consumers always leave your closings extremely happy.
Awesome. Yep. That's what we strive for.
Yes, sir.
We have a great team.
Stephen, you're the owner of Clear Title.
That's right.
And Moorhead Law Firm.
Yep. Not completely the owner. I have partners.
Sure.
They have Moorhead, but founder.
Founder. Yep. Yes, sir. So today we want to talk a little bit more focusing on the title side of things.
Sure.
Being in the insurance industry, and we have a mortgage expert here. We recently, this has come to fruition. I know it existed long time before COVID, but during and after COVID, we've been seeing a lot of title changes, I guess, deed. And then it has to do something about continuation if somebody passes away, or some tax strategies, or Medicare for that matter. Some of the deeds, the way that we're seeing it, it affects Medicare or Medicaid. I don't know which one it is. So one thing that I want to cautious about is a lot of times clients call us and they say they either transferred the deed because of some kind of advice from their attorney, and sometimes they don't.
Well, let me ask you this. This is a great question because we get this a lot on our side. So I come to you and I say, hey, I want to transfer my mortgage or my deed.
Sure.
What perspective from the ownership side of that do I get when I transfer? So I have a mortgage, XYZ mortgage company, and I transfer my mortgage into an LLC or another name without consent. So what does that, how does that affect, the title as well?
Sure. I like to talk about title in terms of it being an abstract type of thing.
Sure.
People get caught up because we're a lot more familiar with cars,
sure,
boats. I have a title to my car. I have it in my safe deposit box, or it's electronically with the state, but they'll print it out for me. That's a title, and it's a certificate of title type of asset. When we're talking about title for real estate, it's an abstract thing. When you say I have title or I have clear title, it just means you're the owner of the property. And we transfer title by deeds, but it also can transfer through a probate or other means, a mortgage foreclosure, that sort of thing. So when we talk about title, it's an abstract thing. And then there are interests in title, like a life estate interest or a remainder interest. And then you could have remainder interests that are contingent or that are vested. So a lot of these concepts are very, very old. They've been in our, essentially the fabric of English law before ours for 1,000 years. So it all came from landlords and tenants in England, and then breaking apart title. They talk about it as a bundle of sticks.
So, like, really for the everyday guy, so I'm going to say a title is just you're going to go back and do a research to say these are the things that clear this quote title, so that I now have ownership, which is now a mortgage or deed, depending on the state.
That's right.
Okay, that makes sense.
Sure.
Yeah.
So from the insurance perspective, whenever we look on insuring a property, the first thing we do is we go and look on the deed. And then we have to match the name insured to where the deed is deeded, right? And that's where sometimes some of these issues comes up, where originally, let's say somebody bought a house in their first name or in their name or the spouse name, it depends. And then 3 years, 4 years, 10 years down the road, their estate grow to a certain level, and now they have a need to talk to an estate attorney, right? Or they get off an age where they're worried that if they passes away, how they're gonna transfer or how that asset will transfer to their family. And that's where a lot of things that's coming up, and that's why I mentioned earlier during COVID and after COVID, we've been seeing a lot of these deed changes. So anytime a deed change, you have to notify your insurance agent to make sure that the insurance contract is drafted accordingly to the name that is reflected on the deed. Sometimes what that causes is the liability portion is not if, God forbid, a house burned down. And sometimes it can deny a claim because the contract that was drafted was in certain specific person's name, not in an estate or a trust for that matter. So I want you to explain to us a little bit the differences between the different type of entity that is owning a deed.
Let me ask you one question before Steve jumps in here. So whenever you have let's say a trust or whatever that may be, does the insurance company, like on the mortgage side, if you want to close a loan in a trust or an LLC, we have to get the trust. We have to prove it before you take title in it. Does the insurance side look at the same thing?
Absolutely.
Okay.
We have to know who's the trustee, ultimately who's the owner of the deed, right? Even in LLC for that matter. A lot of times, you cannot have an operating LLC owning a real estate at the same time. It's going to have to be, or if that is the case, that will be a commercial insurance. It will not be your regular homeowner policy. Right, so it all depends on the entity that actually own the deed.
It usually has to be single entity on LLC on our side.
Correct.
Yep.
Yeah, for residential loan. If it is not, then we'll go into commercial loan.
Yep.
It's the same kind of principle. But that's why I wanted to see, because let's say, for example, what is a Lady Bird deed?
Good question. And you're right. It seems like about COVID, maybe a little bit before that, these things became really popular.
Sure.
And it refers to a type of deed where there's an enhanced life estate. So typically when you have a life estate, it just means that when the owner passes away, the person holds the life estate, the property passes. But with that, once that's created, then the life tenant can't change it. Those people are vested as they have a vested interest in it forever.
Sure.
They also, the life tenant would have liability to the remainder people. So they have liability for waste, like if they don't take care of the property and that sort of thing. And you can imagine when you have a blended family, and you have children, and then you have a step parent, for example, that holds the life estate. Well, there's an area for conflict.
Sure.
With an enhanced life estate, there's not that possibility. The person who holds that life estate, typically the person that's owned the property for a long time, they have the power to still convey the property, mortgage the property, quote unquote, disinherit the people who are on the remainders. They can change it any way they want. Sure. But they would have to do it with a new deed. So that's what a ladybird deed is, and it refers to Lady Bird Johnson. Apparently, that was it's a myth or what.
I just learned something new.
Yeah, but it refers to an enhanced life estate that was created by her lawyers at one point. So they work really well because they avoid probate. It's like something that really doesn't take effect until death, until that person's death.
Correct.
And then it's seamless. All you would need to establish the ownership then would be a death certificate.
Let me ask you this, Steve, from the lender side of it too. So Wadih's looking at the insurance, Ladybird. So I'm a consumer. I go in, I get a mortgage, and do I request a Ladybird? Does a mortgage company allow for that? Or how? I mean, this is kind of all new, news to me. I hadn't even heard of a Ladybird mortgage. Deed until we got in here. So how do you see lenders having Ladybird deeds behind the mortgages possibly?
What typically is going to happen is the person who owns the property, they're going to go see a lawyer. They're going to say, I need a Ladybird deed. They may not understand what it really means, but they have a Ladybird deed prepared. They have a mortgage against the property. And the question is, does that trigger the due on sale clause?
Exactly.
Yeah. I mean, if you make the loan after this happens, you're going to pick it all up and you're going to want everyone to sign off on the mortgage.
Yep.
But in this case, when it typically happens after the fact, does it trigger the due on sale, or does the subsequent death trigger the due on sale? And on the insurance side, really it's the same question. There's mortgage and the insurance policy are contracts. And those are contracts with one person.
Correct.
When that person dies, now there are other people that are in their place.
Yeah. So the reason why we're bringing this up, there is solution to that, right? It's not that you cannot do it. No, it's illegal. No, everything is legal. We just have to make sure that the carrier that you're insured with allow that thing. There's a lot of carriers that do. Some of them don't.
Well, that was the question I brought earlier. So you go back and you look at a trust, or you look at an LLC, the lender can close in those entities, but they have to be approved.
Correct.
To have, not to plug the company, but to have clear title, so that you're vested. And so, the insurance company would have to look at it in the same vein, I would assume.
Correct. And a lot of times, if there is a life estate or a trust, underwriters will request the documents. They want to review it.
Yes.
They want to see who's involved in it, the names,
yes,
what type of trust it is, revocable, irrevocable. Some of them will accept irrevocable, some of them will not. It's not just one answer. And that's why a lot of times, unfortunately, some individuals may not find out the issue until it happened.
Well, they can't protect their interests. And I think Steve was saying that earlier from the mortgage perspective. If I can't accelerate, the due on sale clause, then I can't, like somebody passes away, then I can't really go back and get my hands back on that property, to clear the debt. So that's where I was kind of juggling the Ladybird is when, you pass away. Now, how does that fit into all those entities if you didn't have that Ladybird deed approved up front? So you would then go back in and say, I'm going to close under a deed, and then I'm going to transfer interest of that deed after the fact into the Ladybird deed, kind of like you would move it into an LLC or a trust after you close.
Right.
Okay.
Yeah. No, that's how we see it.
Yep.
But sometimes we don't even get notified.
But the lender, from that perspective, did not approve that, and therefore, from the legal side of it, wills and everything, we could still go in, call that mortgage due.
Sometimes, again, unless you have approval, and a lot of times you can submit for approval from mortgage company. Mm-hmm. It's not something new.
Yeah.
This has been going on for a long time. It's just a lot of times the proper entity is not being notified of a deed change to make sure all of your paperwork and all the findings are correct to match or reflect whatever is on the deed. That's all what we're saying. Because I had a friend of mine, not insured with us, had a Ladybird. The carrier that he was insured with did not allow the Ladybird verbiage. So what they did is they added it as additional interest. Well, there is a big difference between additional interest and an additional insured or named insured. If you are an additional interest, you don't have any insurable coverage, period, under that policy. All what it is a notification in case there was a lapse, a non-renewal, or a non-payment. That's all what additional interest is on the policy.
Yeah.
They did not know that, right? And a lot of times, I mean, a consumer is not going to know the difference. It's up to the professional to explain to them the difference on what it is. And sometimes mortgage company does not catch it.
Well, no, and that's, having Stephen here gives you a good perspective is you can go behind the transaction and you can transfer, your mortgage, which is your deed,
Sure,
into an LLC, into a trust. But if it's not approved by the lender at transaction, then it doesn't carry any teeth in the event the event, whatever life-changing event occurs.
Correct. Yeah, that's why, I felt like, we always talk about different things that we see, educate, some of the consumer listeners, some people may never heard what a ladybird deed.
I never heard of a ladybird deed till we walked in this room, and I've been doing this for 30-something years.
Sure. Well, but you have, let's say, a life estate, right? And then you enhanced life estate. Then you have a revocable trust, irrevocable trust. These are all different type of entities that a deed can be entered in. Is there any other ones?
An LLC.
An LLC, LLC, or
That's typically what we see.
Sure.
Yeah, that's kind of the universe, and I think it all speaks to making sure that everyone's at the table.
Correct.
Making sure that your mortgage company is okay with this and your insurance company is okay with it.
Correct.
And ultimately, it may be okay. I mean, the transfer may be okay, but you don't want to fight about it. You want to make sure that it's clear, and you don't want to give an insurance company an opportunity to deny a claim based on it.
Correct.
Or a mortgage company, an opportunity to call
on the mortgage.
Call the mortgage. Yeah.
So with that being said, too, from your perspective, Steve, on the law side, and then having all the experience you have on title, if you, and maybe it's family dynamics, but I have a house that's paid for, what would you consider the most consumer-friendly way to title that or take the deed or to protect your family and your own interest? I mean, really the goal here is if you pass away, that's not the goal, but if you do pass away and you don't have a will, you don't have these things, then it goes into probate, like you talked about earlier. It could be 90 days, it could be 5 years. Correct. So, what would you say from your perspective, to the general public, what is the best thing that from your chair, that protects their family and their interest?
I think it's part of it is, where are you in life? My mom did a ladybird deed, so her house is paid for, but that's different than me doing one. I'm not ready to do that yet. One of the things as a real estate lawyer, homestead protection is as solid an asset protection as there is. That's why all the major players come to Florida to retire and build a big house, because we have unlimited homestead exemption.
Sure.
And the last thing that I want to do is mess with that. So I would want to have my house in my name, because that's protected pretty much forever.
So let me stop you there for a second. Again, this is speaking to the general public. So if I go in and I take my house from my personal name and I place it into a trust or I place it into an LLC, do I take that chance of losing my homestead exemption?
If you do an LLC, for sure.
Okay.
Yeah, absolutely. I would never recommend that. And frankly, I don't like transferring it at all. It's the one asset I think that you ought to have in your name. It passes outside of probate. The problem is you have to establish it through an order to determine homestead property and who the heirs are. If you have a will, that can take care of that, but that still requires probate. But for most people, I think my top priority would be, don't do anything that prevents you from having that constitutional protection.
Sure.
Yeah.
Wow. Yeah. I mean, that's a good point, and that's something that a lot of people, you don't hear.
Correct.
I mean, this has been a very educational 30 minutes for me just sitting in here already. Wow.
Yeah. No, let's talk a little bit about that subject where we're talking about will and a trust, right? There is almost kind of an order. Do you have to have a will and a trust, or you can have a trust without a will, or you have to have both. Which one will be the most protection?
Well, I think most people are going to want both.
Okay.
And you can have two different types of trusts. You can have a trust that's a living trust, it's revocable during your lifetime.
Sure.
And then you can fund that with your assets. And then you can have a trust that's part of your will. It's called a testamentary trust, part of your testament. And that would only be the controlling document once you die. Sure. So you can have your probate would essentially.
And let me ask you a question. And again, I don't mean to keep interrupting you, but I'm thinking, if I'm listening to this and I'm a consumer, so would you advise me, Steve, if I have a $1 million life insurance policy, instead of my beneficiary being XYZ wife, would you say, okay, my beneficiary would now be my trust?
I wouldn't do that, because I think that could be subject to a claim against your estate. So, but I would have it as my wife, because you want it to go directly to her.
Okay.
And it's a contract, and being a life insurance policy, it would be exempt from the claims of creditors.
Okay, that makes sense.
Yeah,
okay.
yeah.
I mean, and these are a lot of conversations that, I mean, again, you have the law degree and the expertise that people sit around and you hear these conversations. And quite frankly, about 50% of what you said already is contradictory to what people actually think.
Yeah, or what they listen on TikTok.
What they listen to. Yes, I think that's great information, actually.
No, absolutely. This is big.
Well, let me say one thing about revocable trust, because there's a lot of people who sell beautiful revocable trusts, and it's so many times that I see people with trusts, and once they pass away, you realize they never funded them. Mm-hmm. They have this, trust that they paid thousands of dollars for, and they never effectively transferred any assets to it. So in order for it to work, it has to be the owner. The trustee has to be the owner of the property.
So they have to fund that trust prior to deceasing for that trust to actually work.
That's right.
Okay.
For a living trust.
Yeah.
But for a testamentary trust, it would be once they pass away. But that's set up that way. So there are basically two. One takes place before you die, one takes place after, and the one that takes place after is not funded until then. But the one that's the living trust, it needs to be funded while you're alive.
Correct.
Yeah.
Yeah. I mean, so imagine you have that shell that is sitting there, but it's empty if you didn't fund it.
That's right.
There's nothing in it.
That's exactly meaningless. Right. It's just a piece of paper.
Yeah.
Yep.
Wow. I mean, I think that, that's the great thing about having somebody like Steve in the conversation is the way that most people perceive it, and myself as well, by the way, just from conversations and things you've read or whatever it may be, that you have a pre-notion of some of these things, that that's truly not the way it functions.
That's right.
Yeah. Or you think it acted a certain way until you talk to a professional an expert.
Yeah, back to the insurance. I mean, so I think, okay, this is automatically going to transfer over, and that is not the way it is. So, I mean, it's probably a great idea for everybody that myself to take a second and maybe double check behind some of these things, to make sure that the way you think it's going to function and the way it functions are the same. Wow.
A lot of people think these trusts also provide asset protection for them.
Yeah.
And there can be trusts that do that. But by and large, that's not what you're getting for the run-of-the-mill revocable trust, living trust. Having an LLC, using tenancy by the entireties, which is joint ownership with a husband and wife, those types of things provide real asset protection. And that's something I like to encourage people to do. Don't rely on a trust. You got to make sure.
Everything.
Yeah.
Correct. Like speaking of that, even on your checking account.
That's right.
That's one of the verbiage that you have to make sure, because the banker will ask you that.
Yeah.
And a lot of people do not know what that means.
Yeah. Yeah. There's different types of joint tenancy. And it's how you hold property, real estate or bank accounts, personal property.
Correct.
And in Florida, we have this thing called tenancy by the entireties, which is a joint tenancy. It's like it has survivorship, so it passes from one to the other. But it has this great asset protection feature to it, so that the claims of one of the husband and wife can't attach to the property they own in that fashion.
So let me throw this out there in layman's terms, just so we know. So I have my home with my name and my wife. I pass away. I owe Steve $100,000. He had a note for $100,000. He tries to now make a claim against my property via the homestead not there. Then he can't go in and seize that property because the names are not the same as the claim you have.
Let's take it out of the homestead and say that that's a piece of rental property.
Okay, perfect. Yeah.
And you and your wife own that together.
Yep.
It's completely exempt from the claims from my note.
And so just again, to go take it back to an elementary position, when my kids were going to college, I made sure that their names were on all my accounts in case the fact I got killed in a car wreck or something would happen, they would still have access to those accounts.
Absolutely. The cash, the money in it, or else it'll go to probate.
Yes.
Yeah. You can do a POD now, payable on death, or transfer on death.
Oh, wow.
With those types of assets.
Oh, wow. I did not know that.
I didn't know that either.
So you can go have your account set up for payable on death, and it will transfer according to that as a contract.
Oh, wow.
Yeah.
And I mean, the basic concept in this whole conversation is really not to take the rules and bend them. You're really taking them to protect the people you love. And that's what you're trying to do here.
Sure.
Protect your assets and protect your family. And it's really good information, by the way.
Talk to a professional.
Yes.
That's what ultimately, that's the whole idea. That's what we're talking about. Being an insurance, being a mortgage, a law, a title. Talk to somebody that's been doing it for years. Don't depend on what you hear sometimes on social media, TikTok,
especially
all of that,
social media,
right?
by the
Because
way.
there may be a truth to what they're saying, but it's a smidget of information. There's a lot of loopholes that they're not telling you about. That's why you need to trust a professional.
No, it's kind of a wake-up call because you're sitting around every day and you think tomorrow's a given. I'll do it next week. I'll do it next month. Yeah. And then just sitting here listening to Steve and just really peeling back some of these things that we kind of take for granted.
Sure.
All of a sudden you turn around and you could have your family in a really bad position by not, addressing and getting the true information. And I can tell you this, and not to plug Steve and his companies, but I've used Steve on the title side with a company owned before, Clear Title as well. Amazingly, I've used Steve for legal work, and and I can tell you that reputationally and the direction he's always given me has been nothing but amazing. And so back to your point, instead of wondering and guessing, you talk to the expert and get the true information and protect your family and protect yourself.
Sure.
And your assets. You worked 30, 40 years to obtain, and you could lose them in a second.
Correct. Now, Steve, do you want to talk a little bit on all of your, community involvement? I mean, I've seen your name on a lot of different boards, and I don't know how you can do it, my friend, but you are busy.
Yes, I am. Too busy right now. Well, I've been Home Builders Association on the board there in the council for them for over 25 years, and that's been a lot of fun. It's a great organization. It's always had great leadership, and it's just been great to be a part of that consistently. But I've been on boards like Habitat for Humanity and Ready Kids and Achieve Escambia and Wine on the Water.
Yeah, now recently Wine on the Water.
Yeah.
Benefiting Sacred Kids Hospital for Sacred Heart.
Yeah, which is great.
Something that you may not have heard of that I'm excited about, and that's the Northwest Florida Defense Coalition. Wow. So this spun off from the chamber. Couldn't be in the chamber for a variety of reasons, but it serves as the liaison, basically the advocate to DC for our missions on our bases.
Wow!
So we're connected with Hurlburt, with Whiting, and with NAS Pensacola, and we're waving the banner in DC with Congress and with the Pentagon. We have a trip planned for next month where county commissioners from both counties are going up, and several of us from the board. And it takes that presence that you have to have in front of those people. Yeah. But we have a lot of assets in Pensacola. Sure. The Navy has always loved Pensacola, and Pensacola loves the Navy. So we want to have we want to protect those missions, and we want more of them.
Wow. something like that you take for granted. You think is the cake just makes itself, right?
Sure.
But you look back, behind the curtain, you see all the hard work that community leaders like Steve do for our community to make it what it is. And to your point earlier, I mean, the military connection to the whole Panhandle, really. I mean, Pensacola, sure, but the whole Panhandle, it's a difference maker for everyone, and it makes us better.
Well, it's a major drive for our economy.
Yes.
40 to 50% of our GDP.
Yeah.
Wow. Yeah. I mean, you live in this community and you always say thank you to all the military guys for their service, but not only their service, but what they've done for our community as well. That's amazing. And you talk to most guys that have been in the Navy, and ladies as well, that have been in the Navy. They lived in Pensacola at one time. Almost every one of them.
Correct.
I don't care where you meet them, what part of the country.
Training.
Yes. Yes.
One of the things I'm proud of about this organization is that Escambia and Santa Rosa counties are funding it.
Oh, wow.
Yeah, so they are working together in this aspect. There'll be commissioners from both that are sending each of these trips that we go to. And we have a lobbyist there that this coalition engages. And I'll make sure you guys are invited.
Yeah, I would love to learn more for sure.
Our next report type of thing. And we're only a couple of years old, but we need to get the word out about this organization. We want grassroots funding, small dollars as well as big. But the more people that are invested in it, we can go to people. We can go to our congressman and say, "Look, our community is invested. We love the military here, and we want them to stay.
Absolutely.
Want them to grow."
Yeah. I mean, any way we can help, we'd love to. Again, that's the whole reason about the show. It's about community support, community knowledge, what's happening in the community, all about the community,
Well, you take for granted because you see it every day, right? And then all of a sudden you hear it in this perspective and you realize how important it is and how important it is to participate and be involved to make sure that the outcome is where we need it as a community. And to have both counties working, in unison like that, that should tell you a lot about how important it really is to our area.
Do you talk with Jimmy? Have you talked to him yet about that?
Oh yeah. He is definitely involved.
Sure.
He's participated at one of our events.
Nice.
So we'll have a chance to visit with him in DC.
See, let me ask you this. I mean, as connected as you are in this town, as long as you've led all the different organizations, as Wadih said, your name's everywhere. As you start to look forward, what is one of the things that you are seeing that our community's doing that really gets you excited about what it's going to do for our community in regards to stability, economics, whatever that may be?
I think one of those things, there are a lot of economic development activities that are happening right now, and I'm excited about what the city's got going on at the port. Oh, yeah. That's super exciting to me. That's like transformational. And other
Sail
projects.
GP, I don't know if people heard that, but Sail GP is coming to Pensacola. It's huge.
Yeah, it's awesome. Yeah. That and Maritime Park. Yes. What Quinn Studer started is continuing to grow. Absolutely. And the Reverb Hotel, which is, they're in the planning stages right now in terms of moving dirt. Yeah. So we're not talking about planning stages, hopefully one day. We're talking about this thing looks like, all intents and purposes is going to happen. They're a client of mine, so I'm very proud to have an opportunity to work on that. That's awesome. On that project. And just all the other projects that are going on downtown in a time, I think, nationally where we've had some instability financially, interest rates going up, projects have been sidelined. But I think things are happening, and as rates come down and the economy cranks, we'll see more and more of those projects come to fruition.
And let me ask you one more question. Again, just trying to pull the expertise out of you, the knowledge, the history, all those things.
Yeah.
I mean, from a transformational point, go back 25, 30 years and then come to today.
You moved to Pensacola, you were 12 years old?
12 years old.
Wow. So, I mean, what is it? What is, from your perspective, your chair, what do you see the biggest difference? I mean, you could go back and talk about Studer and some of these guys that have come in and done amazing jobs, but what is it you've seen that's just been transformational, mind-blowing, whatever term you want to put on it from your perspective, you've seen the growth in Pensacola?
I think it's the growth downtown. I would have to say the transformation of downtown, which was accelerated by Quint Studer, but also had some real bones to it, like Clark Thompson, who owned this building and redid this building, built the building next door.
He owned several.
Intermission downtown was the Hungry Child's restaurant that he redid. Several of these buildings along here, Clark Thompson did 40 years ago.
Not a lot of people know that name.
No.
All of that behind the scene.
Yeah. Pioneer.
Yes, sir.
Kind of before his time. But that set the stage for some of the charm that I think that Pensacola has. And I've just seen that, over the last 40 years and really, just
exploded.
Yeah.
It's crazy because we both moved here in 99, as we were talking about before we started. And you would go downtown, let's say, 03, 4, 5, even when we had a housing economic boom. I mean, you would go downtown at 8 o'clock and it was a ghost town. It was dead.
Yeah.
There was nothing down there.
No lights.
Yeah. No restaurants, no lights, no anything, no retail, and now you go down and it's vibrant and alive. And I think it's really a great centerpiece for our community.
I do too. Be interested to see what the new construction on Palafox will do.
Yeah, I mean, I've seen the renditions. I mean, we are not that far from it here. I feel like it's gonna be beneficial. Yeah, it may be 5-6 months. A project that's gonna take time, but you're always gonna go through a little bit of downtime to reap the benefits, right? I cannot wait to see it done. I mean, it's beautiful. You go to other cities, you see what they're doing and how much they're investing in their downtown. I think it's time. With everything that's going on around us, it's perfect.
With the buzz, I mean, the buzz downtown is, and I agree with you. I think downtown has been the biggest transformation that I've seen since I've lived here. And not only it's not seasonal. I mean, it's summer, it's spring, it's winter. I mean, just the things that go down there and the businesses and the people behind the scenes, we don't even know their name. I was watching the news the other day, and I could have this wrong, but when they were doing the Palafox construction, they pulled out this big old trunk, and it had the address, I think, of Intermissions on it, actually. And there's no telling how long that had been down there. I mean, this looked like one of those old, 1850 C trunks, and I was interested to know what was inside of it.
That's crazy.
Yeah. The history of Pensacola is amazing. And
this building is built in year 1900.
Wow.
This building that we're in. Yeah.
That's where the Doghouse Deli was?
Yes, sir. Yeah. In 1980.
It's unbelievable. I mean, it's a very unique town. It has a tremendous amount of history. And then, the community and Steve is one of them, the leaders we have. It's humbling, amazing to be part of the community, I think.
Absolutely. Okay, so what else do we want to talk about? I mean, we covered a lot of great ideas. I mean, honestly, I don't want to sound cliche, but to get the information that we got from Stephen, it usually costs you money. No, I mean, let's be honest. Not with any attorney or I mean, you're talking. You gave us a lot of details that sometimes some people will have to schedule a call with their attorney to discuss that, right? The fact that you are able and willing to sit down with us and share all that information, we're really grateful for your time.
Yes,
we appreciate it.
Yeah.
Thank you. You've always been very good for our community, great friend to us, and we really appreciate everything you do for us.
Yeah, and I mean, your point is, yes, we would typically get like a nice little attorney bill for the information.
Oh, 100%.
But if people are listening to this, Steve, you probably save them a ton of money.
Sure.
And just be able to know exactly the questions asked and things to look at. So to have the caliber of knowledge that we just went through is amazing. So thank you for your time.
Absolutely. This has been a lot of fun. Yeah.
All right.
Yep.
Well, thank you for your time.
Thank you.
Thank you, Mr. Moorhead.